Welcome to Cherry Bekaert's next professional services industry podcast. I'm Scott Duda, an audit partner in Raleigh, North Carolina, leader of our professional service industry practice. We're going to cover all things 179D deduction today with Ron Wainwright, partner in our strategic tax group, and Sean O'Leary, tax manager leading our tax credits projects. Including 179D, this is part of our larger focus on A&E and tax, digital opportunities, and other opportunities to give those firms a competitive advantage. Welcome, Ron and Sean. Can you all give us a little bit more on your background for those listeners?
Thank you, Scott. This is Ron Wainwright, and very appreciative of being on this podcast today. As Scott highlighted, we'll be talking about hot topics, specifically 179 Cap D and what that opportunity brings for A&E type firms. So I've been at Cherry Bekaert as a partner coming up on 12 years and am a strategic tax partner in our advisory group in the firm. Sean?
Thanks, Ron. I am a senior tax manager out of the Charlotte, North Carolina office for Cherry Bekaert, and I've been with the firm for going on 10 years and work with Ron on in the energy field for 5 or 6 years. And believe it or not, I actually have a degree in electrical engineering from many years ago, and so very familiar with energy and energy-related incentives.
Great, thank y'all. So, Ron, I mentioned I'm an auditor. So talk to me a little bit about this 179D tax incentive and how it benefits taxpayers.
Thanks, Scott. 179 Cap D of the Internal Revenue Code, as it's often referred to, is an energy efficiency standard. It's an incentive to encourage developers and specifically A&E type firms to design buildings more energy efficient. It ultimately came in the Internal Revenue Code back underneath the Energy Policy Act of 2005 and is actually permanent in the Internal Revenue Code today. So again, it's a energy efficiency tax deduction, which enables the building owners to claim a tax deduction for installing what are referred to as qualifying systems. Tenants may be eligible if they make construction expenditures. When you think about the governmental side, the energy efficiency deduction can actually be transferred at no cost to the A&E firm that did the energy efficiency design. It ranges in 3 elements of the building up to now $1.88. When it came into the statute, it was 60 cents per square foot. That's gross square footage, by the way. In regards to the building shell, the mechanicals in regard to the building and the lighting. So originally it was a range from 0 to 60 cents per element of the building, but now it's at $1.88. And the reason for that is there is a inflation adjustment that is now in the Internal Revenue Code that takes it up to $1.88. But significant incentive, significant deduction, as we'll hear later, in regards to our A&E clients and their opportunities to take advantage of this energy efficiency tax deduction.
Great. So, Sean, what types of investments in real estate are eligible for this deduction?
Thanks, Scott. So the technical name of the Section 179 Cap D deduction is the, quote, energy efficient commercial building deduction. So the starting place in evaluating investments in real estate that are 179 Cap D eligible is whether or not it is for a commercial building. This is, of course, fairly wide-ranging, but includes office buildings, retail buildings, hotels, manufacturing and warehouse facilities, hospitals, and really any other facility as long as it's used in a commercial business operation. What is not eligible for the 179 Cap D deduction is most residential real estate, such as individual homes and apartment houses, which have their own energy efficient incentives and other provisions of the tax code. There is, however, a carve out of residential property that is eligible for 179 Cap D, that being any residential facility that is greater than 3 stories above ground. So large apartment buildings or condominium complexes can oftentimes qualify. And lastly, as Ron alluded to, there is a third category of property which may be eligible for the deduction if it is a government-owned property, which again, Ron will discuss in a minute or two. I should also point out that the investment has to be for the installation of new energy efficient property, which is basically confined to the 3 categories that Ron mentioned, being the lighting, the HVAC, and the building envelope components, meaning that it must either be for a new construction project or for an interior improvement to an existing building that doesn't include the purchase of an existing property.
Okay, so this, to me, when we're talking about energy efficiency, how is that determined? What are the technical requirements under 179D to meet that energy efficient benefit?
So, Scott, this is Ron. One of the key areas when it was placed in the statute in 2005, again underneath the Energy Policy Act of 2005, is that when you think about the standard, it is ultimately referred to as the ASHRA standard. And the standard we're under currently is 90.1 2007. And so think about energy efficiency in the context of a building, a commercial building, or other areas of that building, which is very broad, as Sean highlighted. It must have what is referred to a certification. So before claiming the 179 Cap D deduction, the taxpayer must obtain what is referred to as a certification from a qualified individual. And the certification ultimately has to verify very technical standards that were installed or planned to be installed in the building that satisfy the energy efficiency requirements. And again, let's kind of go back to what is referred to as the ASHRA standard. So the ASHRA standard is actually a standard that is for architects as they draw or design buildings. And where it's applicable here is that 179 Cap D and the savings, that energy efficiency deduction, refer to the reduction in energy and power cost of the combined energy or segments of the building. And again, those are, the shell of the building, the HVAC, which can include hot water systems, and then the lighting of the building. And so the minimum requirement, again, right now is 90.1 2007 for properties that were placed in service on or before December 31st, 2020. And as I mentioned earlier, it did become indexed to inflation, and we know we all sit in a very high inflation currently. So when you think about the taxable year before 2021, it was $1.80 a square foot. When you think about taxable years beginning 2021 is $1.82, and taxable years beginning 2022, it's $1.88. I reference that for the following reason, is that the ASHRA standards are intentionally very low at 90.1 2007. So it is very rare that we will model a building underneath the ASHRA standards in the 3 components, and that building will not qualify for the full amount of $1.88. It is an incentive. It is a encouragement for A&E firms. But the bigger opportunity, which we'll probably talk about, is when you, as an architect and engineering firm, ultimately can receive that energy efficiency deduction from a building that is owned by a governmental entity at the federal, state, or local municipality level.
Well, so Ron, let's talk about that. You've mentioned that, so a government-owned building, universities, municipalities, what does that look like? How to outline that process, how it works, the process, some of the challenges in transferring that deduction.
Good question. We often see a lot of confusion in this area dealing with the provisions for government-owned property. So again, what is great about the statute for A&E firms, which candidly A&E firms often overlook this benefit to them as they're designing a building, a commercial building, but again, it's a very broad terminology. So, it's just not the original building design. It could be designs in regards to expansion, could be designs in regards to the interior of the building. So, of course, we see that significantly across the United States. So when you think about a government-owned property, first of all, there is a carve-out where if a government perhaps owns what is deemed to be a tax-exempt type entity, and remember that the government is tax-exempt, they have the ability, to the extent that that building, commercial building, meets the energy efficiency standards, the 90.1 2007, currently, to transfer, the governmental entity that is, transfers the full $1.88 gross square footage to the A&E firm. And that becomes a deduction on the architect and engineering's tax return. So it is a significant incentive. It is actually called for by statute that governmental entity is called to transfer the energy efficiency deduction. So what does that process look like, to your question? The first thing we do is we make sure that we meet and exceed 90.1 2007. As I mentioned, that is a very low floor as we sit here in 2022. So again, the standard is very old, very dated, highly unlikely that a building, commercial building or any building would receive a certificate of occupancy if it was not being drawn on some of the more current standards, 90.1 2021 as an example. So we model at no cost to ensure that the building that was designed by an A&E firm meets the ASHRAE standards. The next thing we will do is we will outline the benefit of the deduction transfer from the government entity, federal, state, local. Also pointing out that you can go backwards in time, and it is all tied to when that building was in fact placed in service. But a A&E firm can go back 3 years, quote, file amended returns and claim that deduction. And so when you think about that transfer, what is required is that the governmental entity, let's assume we're dealing at the federal level, and so the General Service Administration, or we do a lot of work with the military, the Department of Defense, would execute a transfer document which outlines that we, General Service Administration, we, Department of Defense, state levels, could be North Carolina State Construction Office, are transferring this deduction, gross square footage times the $1.88, to the architect firm that did the energy efficiency design work. Once that transfer occurs, signed by the governmental entity, also signed by the receiving A&E firm, then the A&E firm is eligible to claim that tax deduction on the filing of their current return, if we were dealing with a 21 return, for example, or they may go back and file an amended return in 19 and 18 and 20 as an example, as long as the statute of limitations is open. So it's a significant opportunity, especially for an A&E firm that is doing governmental type work at the federal, state, or local level. And Scott, you pointed something out that I always want to make sure we highlight. So when you think about a NC State University, Scott's in Raleigh, I'm in Raleigh, Sean's in Charlotte, or really any universities across the United States, a dormitory or a commercial building could in fact be, several 100,000 square feet. And so, take a couple 100,000 square foot building or larger in a university setting or in some other type of governmental setting, and think about multiplying that by $1.88. And then that is a phantom transfer, which means you are receiving the energy fee deduction transfer from the governmental entity, and then you're claiming that deduction on your A&E tax return.
Okay, so I know that we completed a case study highlighting the success we had in one of these instances with one of our clients. Can you all talk a little bit about that case study, what that looked like, and the success that A&E firm enjoyed because of that deduction?
So let me set the stage, and I'll let Sean go through the actual case study. Is that underneath Scott's leadership and our industry, we represent a significant number of architect and engineering firms. And as a result of that, we obviously have done a significant amount of 179 Cap D work, really when EPAC came into existence in 2005. And so as a result of that, we have done and can do all of the energy certification that's required pursuant to the IRS software. There's 3 modeling requirements out there. But Sean, why don't you share one of our successes with one of our top 25 A&E firms where we've been able to assist them really since the creation of the energy fee deduction under EPAC.
Sure, thanks, Ron. So, as you mentioned, we do a number of 179 Cap D studies for our A&E clients, but on one particular client, we've completed approximately around 100 projects just since the 2012 year, and even going back further than that. But just since that 2012 year, it's been about 100 projects again, and they've claimed through these 179 Cap D projects total deductions of just around $9 million. Now, many of these projects cover the gamut of government-owned buildings, including local community college, local libraries, state universities across the country, and again, a number of military installations around the country from the Army, the Navy, all the various military branches. I will point out that since these are government buildings and that it does require, as Ron mentioned, a signature from them to transfer the deduction over to the A&E clients. There is an added layer of complexity with these projects, but yet, as you can see, the benefit is significant. And in this case, again, it allowed our A&E client to shield over $9 million in taxable income, for designing energy efficient buildings for these government entities.
That's great. So I know we also have an upcoming professional services article. The IRS recently released an audit technique outline on 179D. Can you all talk about sort of the major issues discussed there and how it might impact taxpayers taking that deduction?
Great question, Scott. So this is a timely question in that the IRS has various groups as well as what is referred to as audit technique guidelines. And so they updated, being the IRS, the 179 Cap D audit technique guideline on May 26th of 2022 of this year for a number of reasons. First of all, as I mentioned, when you think about 179 Cap D, it was made permanent in the statute. So it was made permanent underneath what was referred to as the Taxpayer Certainty and Disaster Relief Act of 2020, really as part of the overall Consolidated Appropriations Act of 2021. So it is now permanent in the statute for tax years beginning after December 31 of 2020. There was a prior ATG out there dating back into, candidly, 2018. So this is being updated for a number of reasons. So remember that 179 Cap D was really enacted to encourage commercial building owners and those of government entities to design and install energy efficiency property. Specifically, when you think about energy efficiency commercial building property. It has an acronym called EECBP. But what the IRS was finding in those early years was that the standards, specifically in ASHRA, were incorrectly being applied to the modeling that was required pursuant to the statute. And again, when we think about EECBP, we're looking at three systems of the building: the interior lighting, the heating, cooling, ventilation, hot water, the HVAC systems, and then, of course, what's referred to as the building envelope, or E&V, if you will. And so what this audit technique guideline attempted to do was really bring forward, since 2018, some of the matters and concerns the IRS was seeing in regards to their examinations. And there is a strong focus, and we wanted to highlight it, in regards to the transfers attributable from a governmental entity to an A&E firm. And so what they were finding was the transfer document was incorrectly being completed because the IRS had really never given a standardized form. So they updated the audit technique guideline across 14 areas. And there were new areas. And the newest area that is not concerning to us, given our work, but what they were finding was, again, they were being done incorrectly. And so there is now a step 14, which is calling for the consideration of a penalty assertion, given that the appropriate ASHRA standards were not being developed. Potentially the gross square footage was incorrect. The ASHRA standard being applied was incorrect. The transfer of the deduction was not accurately reported in regards to the requirements underneath what was issued by the IRS. And so when you think about 179 Cap D, they're very focused, when we think about A&E firms, on ensuring that that is done correctly. To the case example that Sean highlighted, where transfers just since 2012 for this A&E firm, which does a tremendous amount of work. Some A&E firms are focused solely on the government type projects. But what they are finding, and is, if we're going to transfer $9 million of a tax deduction, which literally could save, depending upon the effective rate, somewhere between 2 million upwards of 5 million, depending on the structure of the A&E firm, that we want to make sure that those transfers are being appropriate, as that deduction obviously goes to the A&E firm. But again, to your point, we have an upcoming professional service article that's going to dig a little bit deeper, point out some of the areas, but know that there is a 14-step process. It's a very lengthy document that was issued on May 26th. It has a number of new areas that the IRS is focused on, specifically in regards to the energy efficiency deduction, as well as how that transfer and how that certification was completed, and whether the appropriate ASHRA standards and the overall process was followed correctly and appropriately.
Okay. Ron, Sean, thanks as always for helping our listeners understand this complex tax deduction. I know our clients greatly benefit from your expertise. As Ron noted, we have a number of articles and podcasts forthcoming on 179D and the audit technique guideline we just discussed. As always, our contact information for each of us is included with the podcast, and we look forward to hearing from you and continuing to be your guide forward.